Hello and welcome to Legacy IAS Academy. In this video, we are going to discuss the previous year questions related to Indian economy from the year 2017. So there were a total of 12 questions appearing from Indian economy in 2017, out of which 6 were static and 6 were from current affairs. And these 6 current affair questions were mostly from the reports, as in who releases the report. At the same time, some were related to the schemes, and mostly they were rather easy to answer, fact based, completely fact based. If you had read probably the first 2 lines or 3 lines related to the these institutions in news, you could have answered these questions, most of them in fact. So we'll see the first question. Which of the following has or have occurred in India after the liberalization of economic policies in 1991? So 1991 liberalization, that is your LPG reforms. What happened after this? So with the LPG reforms, we had the sectors of the economy opening up for international investments, right? So trade became more easier, and because investments avenues were opened, jobs were being created, especially in the services sector, right? New lease of services was started, new services was started, and people started entering into these services. So basically a new sector opened up. So as a result, the share of agriculture in GDP, instead of increasing, it decreased, right? It decreased enormously. So the first statement is absolutely wrong. Share of India's exports in world trade increased. Why? Because we were a closed economy. Now we opened up the economy. The restrictions were lessened, so we could export more as well as import in a better manner as well. So the second statement is right. FDI inflows as a result of liberalization increased. India's foreign exchange reserves increased enormously because we allowed the FDI inflows. At the same time, exports, getting the licenses for exporting and the terms under the trade policy for exporting were made much more liberal. So 2, 3, 4 are right. The answer would be B. Clear? Next, what is or are the advantages of implementing the GST? Okay, this was a question which was rather easy to answer if you paid attention to the words, keywords. So it will replace multiple taxes collected by multiple authorities and thus will create a single market. So it is in the definition of GST itself or objectives of GST itself. So the first statement can be rather easily decided that it is the right statement. The second one, it will drastically reduce current account deficit. See this word, drastically reduce current account deficit of India, and will enable it to increase its forex reserves. Now it is not directly correlated. You may have to create a lot of connections to reach current account deficit and the relation with GST. You can say that directly they are not correlated at all. So second statement you can remove, and the word is a strong word, drastically reduce, and it will enormously increase. Again, a strong word, increase the growth and size of the economy of India and will enable it to overtake China. See, these are possibilities, right? So these are possibilities, but it is saying will, right? So for that reason, this would be wrong as well. So the answer is 1 only. Yes. Next. So while this, you may consider this to be a current affairs question, this is actually not current affairs per se. You can answer it with the proper understanding of basics, the fundamentals related to Indian economy. Though we have the tax revenue as a percentage of GDP, as a percent of GDP of India has steadily increased in the last decade. So tax revenue as percent of GDP, basically it is talking about tax buoyancy, right? Whenever the tax buoyancy is more than 1, right? We say, tax to GDP ratio is more than 1. We say tax buoyancy is good. So tax revenue as a percentage of GDP in India has steadily increased in the last decade. This cannot be true. There will be fluctuations, right? So the fluctuations in the tax revenue keep on happening on a regular basis every year. So we cannot say there has been a steady increase, right? Steady increase as in there should not be any dip as such. So generally you don't find such things happening. So one is wrong. Fiscal deficit as a percentage of GDP has steadily increased in the last decade. Again, it is saying steadily increased. So most of the macroeconomic indicators, right, do not show a steady increase or a steady decrease, right? They keep fluctuating as the business cycle varies. So the second statement is also wrong. So the answer is neither one nor two, right? Next. What is the purpose of setting up of small finance banks? So it was in news back then, but generally what happens is, uh, how we study some of the aspects or some of the issues in Indian economy is that if if something comes in news, especially the formation of an institution or the formation of a new agency, and if it is going to stay there, it becomes a part of static. So I have put this particular small finance banks in the static part itself here. So what was the purpose of setting up these small finance bank? They were set up back then, right? In 2016-17 they were set up. So what was the purpose is what is being asked. So to supply the credit to small business units, yes, absolutely, that is right. Second, to supply credit to small and marginal farmers. Yes, that is also absolutely right. So that is the stated objective, in fact. So small and marginal farmers, micro and small industries, right? Micro and small industries, and also to some unorganized entities, unorganized sector entities. For them also, it does the lending business. To encourage young entrepreneurs to set up business, particularly in rural areas. This is not a stated objective of small finance banks, right? So there is no explicit provision that SFBs have been set up to encourage setting up of businesses in rural areas. That's not there, right? So for that reason, the answer would be 1 and 2 only, which is A. So it becomes important for you to go through the objectives or the aims of the institutions that have been set up in the recent past. Okay. Next, which of the following statements is or correct regarding the Monetary Policy Committee? Again, this also was set up only recently when we talk about 2017, right? So by 2017, by the measure of 2017, it was fairly recent then. But again, it will become a part of static. As I told you, if agency is set up recently or an institution is set up recently, still it would be considered a part of static itself. Why? Because it is going to stay there for the coming days. So MPC, it decides the RBI's benchmark interest rates. When we say benchmark interest rates, repo, right? And then your SLR, CRR. So this is this is all set or decided by MPC itself. So the first statement is right. It is a 12-member body. No, it is a 6-member body, including the governor of RBI, and it is reconstituted not every 5 years. Sorry, every year. It is reconstituted every 5 years once, right? So rather 5 years, it is 4 years. Sorry, it is 4 years once. It functions under the chairmanship of Union Finance Minister. No, absolutely no. It functions under the chairmanship of RBI governor, and this person is the ex officio chairman. Ex officio chairman. So statement 3 is wrong, statement 2 is wrong. Answer is A, 1 only. Okay, next. Which of the following is the most likely consequence of implementing the UPI? unified payments interface. What would happen, right? It is saying most likely consequence, which means there can be many consequences, right? Which is the most likely consequence, which is going to happen for sure, let's say. So let's see the first one. Mobile wallets will not be necessary for online payments. Yes, obviously, right? UPI packs the power of all the banks under one application. That's what it does. So one is true. You need not first put the money into wallet and then make the payment. That is not required. Directly from the bank will be connected to the UPI app, and you can pay the money directly from the bank account to the merchant account. So A is true. You need not put the money into wallets. So wallets become useless. Second, digital currency will totally replace the physical currency in about 2 decades. This is not about digital currency in the first place. So 2 is wrong. FDI inflows will drastically increase. Again, it says drastically, and how is it related? Not related. Direct transfer of subsidies to poor people will become very effective. Now, this can be a possibility, but the thing is, UPI has not been initiated for implementing for implementing the subsidy schemes of the government. So, UPI is more about person to person transfers mostly, right? Person to business transfers, right? It is mostly for P2P or P2B transfers mostly, right? Yes, it can be utilized by the government as well, but the main thing that happens is mobile wallets will not be necessary for online payments. So answer is A. Next. So this came in news, but then back then it was considered a part of the static portion itself. Why did it come in news? Because this scheme was discontinued by the RBI. So S4A is scheme for sustainable structuring of stressed assets. Okay. So what is this scheme? This scheme was just about, let's suppose a firm has taken a loan from a bank, right? The firm has taken a loan from the bank, but the firm is not able to pay back, which means now it is a NPA, non-performing asset. So what can the bank do? The bank can, ask the firm to pay up the loan, but the firm is not able to pay up the loan. The bank can convert the entire value of NPA into what? Shares or equity. It can ask equivalent amount of shares or equity from the firm. This is one. But this was called strategic debt restructuring earlier. Now that is not the case. Instead, this scheme, S4A scheme, says that whatever debt is there, we'll convert it into two parts. One is sustainable debt. The other one is unsustainable debt. The sustainable debt is the one which will be paid as debt itself, right? It will be the debt part itself. The unsustainable part, which the firm will not be able to pay, that part will be converted into equity or shares. Those shares will be given to the bank. Okay, that part of the debt which the banks, which the firms can pay, will be converted, will be left as debt itself. That part which it cannot pay will be converted into equity. Say for this, for example, this firm is supposed to pay 100 crore to the bank. Out of 100 crore, 60 crore it can pay. Another 40 crore it is not able to pay. 40 crore becomes unsustainable. This unsustainable part will be converted into what? It will be converted into equity or shares. And these shares will be given to the bank. Now, this is known as S4A scheme. Okay. So it is a scheme of RBI for reworking the financial structure of big corporate entities facing genuine difficulties. So that is B. So ecological costs, wrong. Disinvestment plan, wrong. It is an important provisions in the IBC code recently. No, that is also not the case. So the answer is C. Sorry, B. Next. With reference to National Investment and Infrastructure Fund, NIIF, which of the following statements is or correct? So NIIF has been structured as a category 2. What is it structured as? It is structured as a category 2 alternate investment fund by the SEBI, right? SEBI classifies this fund as an alternate investment fund, and that too, it is category 2. So there is category 1 as well, category 3 as well. So we have 3 categories. So it is category 2. So what happens here? Which of the following statements is or correct? So it is an organ of Niti Aayog. No, it is not an organ of Niti Aayog. So in this, the government has created this fund. What it does is it manages the money which is there in the fund, and within this fund there are 3 more funds that are created. One is called the master fund, which usually utilizes the money for building infrastructure. Fund of funds is the other one, and the strategic opportunities fund is the third one. Strategic opportunities fund, that is the third one. So we have 3 funds within the NIIF. So these 2 funds are used to invest in equity, that is shares in the share market, so that it gets the return, right? So based on risk adjusted returns, it works rather efficiently to generate more of returns for the fund. The corpus which the government put across initially is not 4 lakh crore, it is 40,000 crore, 40k crore. So this was in news, it was created back then, it was in news, that is why it was asked in the examination as well. So the answer is B, neither one nor two. So it is not an organ of Niti Aayog, right? So it is an alternate investment fund set up by the government of India, right? And it has 3 funds within it: master fund, fund of funds, strategic opportunities fund. So the second and the third are for equity investment, make investment and gain returns. Master fund to make investment in infrastructure, right? Next, NPCI helps in promoting financial inclusion in the country. So one of the main aims or objectives of NPCI is financial inclusion itself. The second one, NPCI has launched RuPay, a card payment system or a card payment scheme. Is this true? Yes, absolutely true. So RuPay is a card payment network, right? It is a card payment network. Now, what is this card payment network or a card network? What does this mean? So you have to understand 3 things. One is the payment gateway. The other one is payment processors, and the other one is payment network, or we can say card network. So 3 words: gateway, processor, network. So you have to link these 3 in order to understand this. So what happens generally is that you have a bank, you have a merchant, let's suppose merchant 1, bank 1, bank 2, and merchant 2, and it's you here, right? So if you go and swipe a card, right? You swipe a card in the card machine, that is the POS machine. So this merchant 1 has the bank account in where? Bank 1, but you have the bank account in bank 2. So you swipe the bank 2 card in merchant 1's or bank 1's POS machine. So in order for this merchant one to get the money into his bank account, that is bank one account, so there has to be an interaction that happens between bank one and bank two. Who ensures this interaction between bank one and bank two? First, there has to be a payment network, right? There has to be a card network. This card network or payment networks come as Visa, right? Visa, and then you have a Maestro, and in India, a MasterCard as well. And in India, we have Rupee. So these are all payment networks or the card networks. Now, what is this payment gateway and payment processor? So the payment gateway is the one. So let's suppose this is a service. Service of what? A service which ensures that the card is authentic or not. Authentication purpose. That is what this payment gateway does. Authenticates the card details, right? Validation part. What about the payment processor? This person is the one who ensures that the money from bank 1 reaches bank 2, or from bank 2 the money reaches bank 1. So all the three are required for a transaction to happen. So that is what your payment gateway, payment processor and payment network does as individual processes. But generally what we see is some of these firms give all the three services. Some of the firms provide only payment gateway service, some provide only payment processor service, right? Some provide two of these services. So it depends. RuPay, on the other hand, is providing all the services. Okay, so it is a card payment scheme. So that is the second one. So it is launched by NPCI. That is also true. Answer is C, both 1 and 2. Next, BTIA, broad-based trade and investment agreement. It was in news back then in the context of negotiations held between India and which of the following organizations? It was European Union. Why? Because the trade agreement we had with the EU, right, had come to an end because there was Brexit as well, right? Brexit had happened, so we had to renegotiate the terms. So that is why. So the new agreement that was being signed was named Broad-Based Trade and Investment Agreement. So this BTIA is a comprehensive agreement which covers all the aspects related to trade in goods, services, intellectual property, right? Even investment. So it covers all these areas. So this had a bone of contention. This was a bone of contention between the European Union and India. So the signing was not so easy, right? So that is what it was. That is why it was in news. So the answer is European Union. Next, this also is related to current affairs. While you must have already read about it, so the trade facilitation agreement was ratified by India. It was at the forefront of signing this agreement, especially leading the developing countries. TFA is a part of WTO's Bali Ministerial Package 2013. That is also absolutely right. But why did this come into the paper was because the TFA came into force not in January 2016, but the same year as the paper was, this paper, that is the year 2017, February, right? It was very much in news. That is why this question has been asked. So if you remember that it was in, February, it came into force, right? If you had come across that, you could easily eliminate 3 is wrong, right? 3 is clearly wrong. So you just have to eliminate 3. If you eliminate 3, so B, C, D are gone. Answer is A, right? Next, which of the following gives the global gender gap index? So what is this global gender gap index? So this gender gap report is released by the World Economic Forum, WEF, and the highest possible score in this is 1 and the lowest possible score is 0. So scores vary from 0 to 1. And it measures gender equality, right? It measures gender equality, and across 4 parameters actually. One parameter is economic opportunity. The second is political empowerment. And third is educational attainment. And four is health and survival. Okay. So on the basis of this, the index was created. So India had actually slipped some 4 places back then when this report came out. So for this reason, it was in news. So the answer is World Economic Forum. So that's it from 2017 paper. So you'll get the 2016 paper analysis as well related to Indian economy pretty soon. Thank you for watching. Do subscribe. Have a very nice day.